Hello there, and welcome to the Weekly Outlook. We're going to have a look at the calendar. There's a few key events happening next week. The start of the week is a little bit quiet. Monday, there's pretty well much nothing happening on Monday. We've got NISA business confidence on the New Zealand dollar at it's tentative, but it'll be in the evening, probably after 9, certainly after 9 o'clock. Not expecting too much from that. The pressure is going to be on the New Zealand dollar though, but more so going through to later on in the week. We've got the CPI quarter on quarter at 9:45 p.m. on Tuesday, which is expected to come in at minus 0.2%. Now, the New Zealand dollar has been under pressure already. Against the US dollar, it's had a bit of a push down from this 6.9 level all the way down to back through the fair price of 6.5. It's kind of found a little bit of a support. It's rejected this previous double bottom pattern here, but what we've got is also we've seen a double top pattern develop here on the daily chart as well. So further downside on this, I would suggest, is going to be the breakout, or it's going to break out the length of from where the top of the W is to the neckline, okay, or top of the M, I should say, to the neckline. So we're looking at a 400 pip breakout from this point here. So let's take it from this level, measure this 400 pips down. So we're looking at reaching that 6,000, or that 60 cents to the dollar target, which is consistent with my previous analysis way back here for it to reach that price. Obviously, we had this pattern develop here, which consisted with the breakout, which we anticipated, and then we had this falling channel here as well. Fake breakout on this one, and it did rally back up, and we've been waiting for this rally to happen for a resale, which we've had multiple resales on this on the New Zealand dollar, and now it's come down to this bottom of this neckline here. We're now looking for this breakout point, and I think a new low into this 6375 area is going to depict the future of this the next couple of days. It may even this move may happen very, very quickly, especially if that CPI data on Tuesday comes in lower than expected. The pressure's going to be on the New Zealand dollar anyway. Obviously, we've got the slowdown in China as well, which is weighing on these antipodean currencies at the moment. So all these sort of things, none of it is in favour of New Zealand dollar rally. Okay, so that's the first one that we're going to be looking at next week, and then moving through the chart, we're going to be we've got Chinese GDP quarter on year. Isn't expected to change, but obviously if it does, it could put pressure on the Chinese, on the antipodean currencies, New Zealand dollar and Aussie dollar as well. Aussie dollar at the moment is looking quite interesting, but in terms of the fact that it's really reaching this bottom price of 6.8 at the moment. Okay, now I do feel this is a point, a floor for the Aussie dollar, US dollar. I could be wrong. It's not a price that I'm just going to buy at willy-nilly. It's gonna be a price that I look at in depth and look at the technicals to see if we are getting a good solid rejection from that 6.8 level, and it will be over a period of days. It won't be over a period of hours that I'll be looking at this. It'll be over a period of days. We've got to see a good solid rejection from that area, purely because the fundamentals at the moment are still pointing for that Aussie dollar to be bearish. Not much data coming out on the Aussie next week, so it's not really going to be that much in focus for us. What we are going to be looking at, though, is going to be the pound, and we're going to be looking at the euro as well, and the Canadian dollar. So let's go over to those currencies. Okay, so first of all, we've got the euro on the daily chart here. We can see that we had a fairly sizable amount of consolidation on the euro since we reached this bottom price of 104.50, going back to the middle of at the beginning of 2015. Since then, it's been having this fairly consistent sort of consolidation and rally pattern, and staying below this 115 area, with that one spike up to 115. We've been bearish on the euro for a long, long time. We will continue to do so until we reach the parity level of 100 of €1 to $1, and possibly beyond. Some analysts are expecting 75. So the euro will actually be 75 cents to the dollar, which will be undervalued to the dollar there. Now, as you can see on the daily, I marked out some time ago this wedge pattern. Now, what we've got here is a falling wedge, which is actually broken out of now and pulled back, and it hasn't even attempted to retest this wedge. I do feel the euro will stay below this price of 11057. Now, what's interesting, what we've got on the calendar next week is we have got the euro press conference. Okay, and what we're going to be looking out for is the tones that they come out with, whether they're hawkish, whether they're dovish, and the sort of forward guidance they give to monetary policy. The minimum bid rate isn't expected to change. It's the press conference that's really going to be the focus here. And we've already had members of the ECB come across saying that it's not the right time to add further QE. They need more time to see how the current QE program is developing in the economy. But as we know at the moment, that inflation is like 0.2% at the moment. It's very, very low. It's way off target, which is 2%. It could be that in the December meeting everybody expected the euro to announce further QE, and they didn't, which is why we had this big rally in the euro because of that. And then since then, again, it found that cap of 1105, and it's been going sideways ever since. Now, over the last week, it really has sort of started to consolidate. It had one spike up there the other day to 109.80 on Friday, and I think what will possibly happen is if we get a slightly neutral tone from the ECB, I think we will see this area, this sell zone here, retested. But it's really just going to give us an opportunity to resell it. So I'm not going to be trading into it because I believe that they may be slightly neutral or even a little bit hawkish, which will cause the euro to rally for a period of time. But then I think it will sell off again. Now what I'm going to be waiting for is obviously to see how far that rallies up, and then looking for those candlestick rejection patterns again, and seeing if we can get in for a sell next week on based on that. Okay, so that's the euro. The pound, again, the pressure is on the pound. We've gone from a situation with the pound where everybody expected to see a rate hike in 2015. The pressure's really been on the pound over the last few weeks because things have started to deteriorate. Things have started to fall away. We've got average hourly earnings index out on Wednesday. We've got claimant count change. The average hourly index is expected to drop from 2.4 to 2.1. It's already dropped from 3 down to 2.4. Previous to that, that's the highest it's been so far. So the average hourly earnings has started to stagnate a little bit, which shows that employers aren't paying more for labour, and it also shows there's a little bit of slack still in that labour economy. The unemployment rate isn't expected to change, but the claimant count change is expected to jump slightly, so more people claiming from the state, which is never a good sign. So the pressure back on that. We've also got the CPI before that at 9:30 on Tuesday, year on year. Now this isn't expected to change. It's expected to come in at 0.1%. If this comes in slightly better, then it probably will cause a rally on the pound. And if CPI comes in slightly better, then it may be that the average hourly earnings actually shows a bit of an uptick or slightly higher than expected. And it could be the beginning of the rally on the pound. However, whether that's going to be sustained or not is going to be be affected by the continuous data that comes out over in the future. But again, it's going to be one that we have to trade out of, not one that we can trade into. Okay, and it's going to depend on those figures. If CPI comes in as expected at 0.1, it's going to be a non-event and it won't really affect the pound. Okay, it's only really going to have any effect if it drops or if it goes up. If it drops to 0.0, then again we're going to see the pound sell off quite quickly, and we're going to be looking at that original floor of 4,000 in the short term, okay, and possibly below. Some analysts are already suggesting 1.3 and even 1.26 as a target for the pound against the US dollar. Obviously this is fairly low and going back to the prices in 2008 when we had the recession. So we'll see what happens there, but again we're going to have to trade out of this event. Canadian dollar is the other one that I've got in focus this week, and that's because we've got the BOC monetary policy statement, the rate statement, and the overnight rate. The overnight rate is expected to drop to 0.25%. Now again, this is probably going to be an insurance policy by the Bank of Canada against the falling oil price. which is understandable. We're now below $30 to the barrel on oil. Things are getting a little bit concerning, and we've seen this huge rally on the US dollar CAD over the past couple of weeks. Which really has had no indication of any sort of profit taking or pullback, which is in fact what we've been waiting for, to be able to take some, to be able to either trade it on the sentiment back down, or use it to get back into an entry price. Now, if they keep the rate the same, and they come across in their rate statement as being quite hawkish, I think that we probably will see the US dollar Canadian sell off down to these previous levels, maybe round about 1.4, maybe 1.3, 1.39. However, I think it's fairly unlikely with the oil price that they're going to be optimistic in any way, shape, or form, and I think that an overnight rate cut is probably quite likely. So, how can we trade that? Well, trading this at the moment with it being on such a big rally is going to be fairly difficult, because it's really at the point where it should be reversing and having some sort of sentiment reversal. As you can see, if we take it to the weekly chart and scrunch that up, even on the weekly, it's coming nearly to the top levels now of like 2000, where it was up at 1.6. We were not that far away, so this huge rally since then really has sort of thrown a bit of a spanner in where we can get into this trade. It would be easier for us to get better data from Canada, and just have it pull back, and where we could then trade it for a buy, or even trade it for a sell on the way down. We could look at some of the other currency pairs. We could look at things like Australian dollar, Canadian dollar. Let's have a quick look at one of those there. Let me just type that in. Oh, there it is, Australian dollar, Canadian dollar there. We could look at this as a potential rally, although at the moment it is fairly high. The Aussie dollar as well isn't that strong at the moment. We are having problems due to that slowdown in China. I would maybe look at this in the short-term rally, but again, what we're doing here is looking at a 2-week currencies trading against each other, which is never really a suitable idea. What we'd need to see, the only reason I'm bringing this one in focus is because of that floor on the Australian dollar against the US dollar of 6.8, which could put a stop in the downside to the Aussie. So what we'll do is, I think again we'll be looking at trading out of that data from Canadian, and we'll see what the effect is and see how far this Aussie dollar rallies. It may be that we look at the rally as a point to get in for a sell, and we'll look at the rejection in the candlesticks again. So this will be one that we'll be looking at in the live room in detail next week. Okay, so that's all the trades I'm interested in. I'm looking at the euro, I'm looking at the pound, I'm looking at the Canadian dollar, and possibly the New Zealand dollar early in the week. So I hope you can make some pips and have a good week. Cheers for watching.